Ever feel like your car insurance rate was pulled out of thin air? Like one day you're paying a certain amount, and the next month it jumps for no reason? Well, buckle up, because what you're about to learn might completely change how you think about car insurance. Today we're going to unpack the real reasons your car insurance rates go up or down. And trust me, some of these might shock you. Like the one factor that has absolutely nothing to do with your driving record, but could be quietly draining hundreds of dollars from your wallet every year. Let's find out what's really going on behind the scenes. Number 1. Your driving record matters more than you think. Let's start with the obvious one, but it's also the one most people underestimate. Your driving history is like your insurance report card. If you have speeding tickets, accidents, DUIs, or any kind of traffic violations, your insurer sees that as risk. The more risk, the more you pay. Now here's the twist. Some companies look back 3 years, others look back 5. So that one mistake from 4 years ago might still be haunting your premiums. Example: if you got into a fender bender 2 years ago and filed a claim, that can easily increase your rates by 20 to 40%. Just one accident. Number 2. Where you live affects your wallet. Yes, your zip code can be a deal breaker. Live in a city with high crime or dense traffic? Expect higher premiums. Insurance companies track accident rates, theft claims, and even vandalism by location. A driver in rural Iowa might pay way less than someone in downtown Los Angeles, even if both have spotless records. It's not about you. It's about the neighborhood. Even moving just a few miles can shift your rate up or down dramatically. Number 3. Your car type says a lot about you. Not all cars are created equal, especially when it comes to insurance. Drive a flashy sports car? Expect a flashier bill. Insurers know that certain cars get into more accidents or cost more to repair. A red 2-door coupe might cost a lot more to insure than a silver 4-door sedan. Example: a brand new Tesla Model S costs more to insure than a Toyota Corolla because of repair costs, technology, and theft risk. Oh, and insurance companies don't care if your car is your baby. They care how expensive it is to fix when it crashes. Number 4. Your age isn't just a number. Age plays a big role in how much you pay. Teens and young drivers are the most expensive to insure. Why? Statistically, they get into more accidents. A 17-year-old might pay triple the rate of a 30-year-old. But here's something surprising. Rates also go up again as you hit your senior years. Once you're over 65, your reflexes and vision tend to decline, and insurers factor that in. So yes, both young and older drivers often pay the most. Number 5. Your credit score can change everything. Here's the one most people don't see coming. In most states, your credit score is a massive part of your insurance rate. Why? Because data shows that people with low credit scores file more claims. It might seem unfair, but it's true. A person with bad credit might pay twice as much for the same coverage as someone with excellent credit, even with identical driving records. So if your credit score drops from 750 to 600, don't be surprised if your premium spikes. Tip: pay bills on time, reduce debt, and monitor your credit report for errors. It's not just about loans. It's about lower car insurance too. Number 6. How much you drive adds up. If you're driving 25,000 miles a year, you're more likely to have an accident than someone who drives only 5,000. More time on the road equals more exposure to risk. So if you have a long daily commute, you're probably paying more. But if you're now working from home or only driving occasionally, ask your insurer about a low mileage discount. Or even better, some companies offer pay-per-mile insurance. Drive less, pay less. Simple as that. Number 7. Your coverage choices make a big difference. What you choose to cover and how much is a big deal. If you add comprehensive and collision coverage with low deductibles, your rate will go up. It gives you better protection, yes, but it costs more. On the flip side, if you raise your deductible, the amount you pay before insurance kicks in, you can lower your monthly premium. It's a balance. Want peace of mind? You'll pay more. Want to save money? You'll take on more risk. Example: a $250 deductible might cost you $120 a month. Raise it to $1,000, and you might only pay $80 a month. Number 8. Your gender and marital status matter. It might not seem fair, but insurance companies use statistics, and the stats don't lie. Young men, especially in their teens and 20s, tend to pay more than young women. Why? Because they're statistically involved in more accidents and drive more recklessly. And get this, married drivers usually pay less than single ones. The idea is that married people are more responsible and cautious on the road, so tying the knot might actually lower your insurance bill. Who knew love could save money? Number 9. Your insurance history tells a story. If you've gone without insurance for a while, even if you weren't driving, insurers see that as a red flag. It's called a lapse in coverage, and it often leads to higher rates. Even a short gap, like 1 or 2 months, can trigger a penalty. So if you're switching providers or taking a break from driving, try to maintain at least basic coverage. Consistency earns you better pricing. Number 10. Claims history follows you everywhere. Every time you file a claim, it's recorded, not just with your insurer, but in a shared database that all insurers can access. Too many claims, even small ones, and you might become a high-risk customer. And guess what? That label sticks, even if you switch companies. So sometimes, it's smarter to pay for small repairs out of pocket rather than file a claim. Example, if your deductible is $500 and you have $650 in damage, filing a claim might not be worth the future rate hike. Number 11. Bundles, discounts, and hidden savings. You might be overpaying right now and not even know it. Insurance companies offer all kinds of discounts, but they rarely advertise them. Bundling your home and auto insurance. Discount. Safe driver? Discount. Good student? Discount. Military service? You guessed it, discount. But here's the catch. You usually have to ask. So the next time your policy renews, call your insurer and ask what you qualify for. Could be a 10%, 15%, or even 25% drop. That's real money. Number 12. Your job and education level can impact your rate. This one surprises most people. Some insurers factor in your occupation and education level when calculating your rate. Engineers, teachers, and nurses, they often get lower premiums. Why? Because statistically, they're safer drivers. Someone with a PhD might pay less than someone with a high school diploma. Again, it's all about what the data says, even if it seems strange. So when applying or renewing, make sure your job and education info is up to date. Number 13. Safety features and anti-theft devices help. Got anti-lock brakes, airbags, or an anti-theft alarm? You could be saving money. Cars with safety features are less likely to be involved in serious crashes or stolen. That means fewer claims, and fewer claims mean lower rates. Simple tech like a steering wheel lock or GPS tracker might also qualify for discounts. Always list every safety and security feature your car has when getting a quote. You paid for those features. Make sure they pay you back. Number 14. Loyalty doesn't always pay. You'd think sticking with the same insurer for 10 years would earn you a reward. But sometimes, it does the opposite. Some companies use what's called price optimization. They know you're unlikely to shop around, so they slowly increase your rate. Loyalty becomes expensive. That's why it pays to compare quotes every year, even if you don't plan to switch. A 15-minute call could save you hundreds. No joke. Number 15. Your policy start date can affect your rate. Here's a quirky one. Some insurers offer better rates to people who set their policy start date in advance. If you wait until the last minute to buy coverage, they might charge you more. Why? It signals disorganization or desperation. But if you shop early, you look more prepared and responsible. Insurers like that. So whenever possible, don't wait until the day your old policy expires. Plan ahead. Car insurance might seem like a mystery, but once you understand how it works, you can take control. Every choice you make, from where you live to the car you drive, plays a part in the price you pay, and sometimes small changes lead to big savings. So tell me, what surprised you the most about today's video? Drop your answer in the comments.